Our panelists today are Executive Director at the Energy Professional Association, Shannon McGriff, Senior Managing Director, Priority Power Management, Trent Stout, former ERCOT President, Brad Jones, EVP of Power for Lancium, Shaun Connell, Vice President, Energy Division, Cholla, Clayton Greer.
All right. Good afternoon, everyone, and thank you for joining us today. We have a great group of panelists lined up. We are going to start with some introductions. Trent, why don't you kick us off?
Hello, I'm Trent Stout with Priority Power. We focus on the full spectrum of bringing in energy to Bitcoin miners, predominantly is what I focus on. We also do oil and gas. But for today, we're going to talk about miners and how they use the demand side of the equation to really optimize their energy over the life of their facility. And looking forward to meeting with the guys that we work with every day. I'm also on the board of the Texas Blockchain Council, so it's exciting to see this room filled again, our second year. So thank you for the support and look forward to continued growth.
Excellent, thank you. My name is Brad Jones. I'm the former interim CEO of ERCOT, so there's a lot in there, but I am retired. That's the most important part. I am retired now, but former president of ERCOT.
My name is Shaun Connell. I'm the EVP of Power for Lancium. My background really comes from working for a power generation company where I started in the turn of deregulation around 2000 and helped build and lead a trade desk that was responsible for managing a fleet of generation assets. My job for Lancium is to essentially do what I did for power generation, but in the Bitcoin mining space, and essentially managing inputs and outputs. So Lancium is an energy technology company based out of Houston, about 100 people, and what we do is we have IP that enables large loads that have certain characteristics to be able to be like power plants in reverse, so essentially helping with the flexibility needs of the power grids.
I'm Clayton Greer. I'm the Vice President of the Energy Division at Cholla Energy. And my background is I was a design engineer for the utilities for a decade. And then the last 2 decades, I've actually been working in ERCOT market design for mostly banks. Actually was at the first network policy meeting back in Austin back in 1999 with Brad Jones hosting. And then we went from there and built up what I think is one of the best markets in the United States.
Great. Thank you guys for being here. My name is Shannon McGriff, and I serve as the Executive Director of TIPA, which is the Energy Professionals Association, and I've also been a broker and consultant for a little over a decade now. So we're going to dive in and talk about how demand response can impact the mining industry in Texas specifically. So to kick off, the first question we have is, how does demand response provided by mining loads support short-term and long-term reliability in ERCOT? Trent?
All right, let's get right to it. So this is really the interesting part of the equation that got me passionate about working in this space. Like Shaun, I have a background in commodities trading, and when I realized the potential of these flexible loads and the benefits of the grid and just the complexity that they offered, it just got me really excited and showed me an entirely new side of Bitcoin that had effects that fostered renewables to fostering the blockchain and bringing it all together. So the simple thing is, in demand response, instead of being a generator where you bring the load up to support the grid, as a load, if you're operating, you turn down to support the grid. And as we know, without significant batteries, there has to be basically supply and demand have to equal. And there's not that many flexible loads that can keep up with the rapidly changing pace of what's going on in any given moment when people are turning light switches on or equipment on. And so miners represent one of the very early flexible loads that can respond to this in seconds. And that creates a unique tool that the grid operators like ERCOT can use in their long-term planning and their short-term planning. So on a real-time basis, a day-ahead basis, and out into the future, really planning for a different, new advanced grid with loads that have economic incentives to turn off, that can do all these things. And I don't want to take all of the time here, and we'll get back to it. But everybody's going to have a lot more to add to that.
You left a little bit. You left a little bit for us. So for many years, ERCOT had been looking for loads of scale that could really respond in a demand responsive way that could help us balance our grid. Back in 2015, you may remember we started the process of setting up loads in SCED. It was through, I think, about 2016 or 2017. No one showed up at first. There just wasn't any loads that, of scale that could really help us in that market. But it's here now, and it's a great thing for helping us to balance the grid, helping us to manage all of our resources. The Bitcoin has the nature of really turning down when prices begin to rise in a way that we can give that power back to other consumers. And at the same time, as we bring more and more renewables into the state, it becomes a driver of more renewables. Because right now, if we bring in all the renewables that are signed up to want to come to our state, there will be a significant depression of pricing during the day. By having Bitcoin there to assist and to stabilize those prices throughout the day, it's going to drive more renewables into our system. And that's good for Texas.
What Brad said there, I guess. So I guess kind of like zooming out is, why is flexibility so important? Everybody knows that we're going through this energy transition that's happening where we're replacing fossil fuel generation with renewables. And to have this shift that happens, to decarbonize energy, that means that you need to do a 3x in your electricity. So you're going to electrify everything, having cars, et cetera. So you got this 3x that just happened in electricity. Now to building out those renewables, you're going to have a 15x on the wind and the solar, right? And so that's great, but what creates with the wind and solar is you have a lot more kind of intermittency that's kind of challenges that kind of throughout the day. And so what really becomes really important, and this is like IEA data, is they say that you're going to need about 4 times more flexibility in the system. And so that large part can come from batteries, demand response, and really this mining is really acting as the perfect load that can actually provide this kind of real-time load balancing that goes up and down, as also providing those ancillary services that were previously just offered by generation, and now you've got this new resource that can come in and to kind of help support that. So, yeah.
Yeah, there's not much to add there, but maybe the way to look at it, you hear the regulators saying a lot of the time, there's times when the sun doesn't shine and the wind doesn't blow, and that's a problem. The other is a problem as well. There are times when the wind blows and the sun shines and there's no load out there. What happens is Bitcoin operators can come in and fill that gap, take all of that energy that is not needed anywhere else in the system and is now being produced at negative prices and produce something of value with that. So I think that there's a lot of value there, and it also provides value to the resources in that they now have a market that they didn't have before. So from a long-term reliability standpoint, I think it's going to promote the addition of a lot more renewable energy and maybe some fossil as well.
That's great. So we know that there are several different products available for demand response in ERCOT. And so this can be an opinion question. What product would you think is best for mining loads and why? Let's start with you.
I will obviously say ERS. Anybody that's familiar with the LFLTF, I've been trying to promote all of the Bitcoin mining load to get into ERS. ERCOT is taking steps to require, not just require flexibility in your load. So they want to be able to come in and turn your load off if we get into situations of extreme scarcity. That's exactly what ERS does. So you can either basically provide that service free of charge, or you can get paid for it. Last year, it cleared about $6 a megawatt hour. So to me, that seems to be a very easy fit for a crypto load. From there, you can go into, if the prices get depressed in ERS, then you can go into the load side of the responsive reserve service category. I think that that would be something that would be fairly easy to comply with for some of the larger operations. When you take that step, though, there are a lot more technical requirements for it. You have to have telemetry and some things that are a significant cost. So you need to be making sure that you're getting enough revenue on the other side.
Yeah, so I think what's wonderful about Bitcoin is it's very similar to power generation and how they make decisions about I've got this capacity for power and how do I get the most margin out of this unit. And so what they're going to do is they're going to make the decisions on what is the best way for me to run this unit. So it's either selling energy or different ancillaries. And depending on kind of what their operations are like, they might sell one other different product versus another, but it's going to be really specific to that unit and kind of what's going to drive the best margins. And so Bitcoin mining it kind of depends, right? Because there's going to be times in a cycle that your Bitcoin price has a break even of, we'll call it a couple $100, where you're actually really deep in the money if energy prices are $50. And that type of scenario is that you probably want to be selling some type of ancillary service that you're wanting to be on quite a bit. So maybe you're selling like the response reserve. However, if you go into the summertime and you have these break-evens that are about $125, right, and you have energy prices that are in the $200 range, right, you want to shift out of that and you want to say, we want to be price responsive, right, because we're in this new mode and we want to have the ability to turn on and turn off. And maybe when we go down the panel, we can kind of pull up a screenshot that kind of shows what this looks like.
Very good. So I promised that I would not answer this question, but I think your answer was helpful to me because I've looked at some of the summer activities and I've seen where there have been high prices and still some of the Bitcoin on ancillary services, which confuse me. But I like your logic that may have just been a misestimation of where the market prices would be that day. And normally you wouldn't have ancillaries on a unit that you would expect to have high prices that day. Makes sense.
So I'll answer it a little bit differently. I think the important part is retaining your flexibility. And you can't think about the demand side without also making sure the supply side fit together. And so the simple problem that fixes that, if you have purchased energy ahead of time and you have ancillary service obligations, you're not exposed to the price, and therefore you can maintain your obligations and run without being exposed to that. So as the programs change, these small details are very, very important, and you have to make sure they work together. You don't want to enter into a contract structure through how you're either purchasing your energy or sell your optionality to someone on a long-term basis, because the value of these are going to change, and it's about retaining your flexibility. Ultimately, as a flexible load, you're long an option, and all the increasing renewable penetration just creates volatility. Volatility goes up, option prices go up. So as a miner, when you're looking at ancillary services, it's one way to monetize your optionality. And whether it's ERS, which is looking really good right now compared to what it was, whether it's CLR, lots of things affected that market over the summer that might revert next year. And so when we talk to the clients about it, we talk about, okay, what looks good now, what looks good in the future, and as the loads get large, we've got to split them up. There's only a certain amount of ancillaries that ERCOT needs to procure on a daily basis. And if the mining load that we project will come online in the kind of 3 gigawatt range over the next 24 months, that's more ancillaries than most single programs would be able to hold, and obviously prices will respond to that. So miners will respond to price. So they'll go to where it's needed. And then we've talked, Brad, about new programs that, solar, wind ramp rates. And so in the future, as ERCOT needs new programs, miners need to be positioned to also show up and help with those. So maintain the long-term flexibility because the value and the needs will change.
I think there's a key in here, though, that making sure getting a PPA seems to be a desire for a lot of the Bitcoin miners, but you have to make sure that that PPA is structured correctly. If you have a flat price PPA, then your benefit is gone at that point. You are the hedge for your own load. So to the extent that you get into a PPA, make sure that you maintain that flexibility in that PPA. If you buy one, it would be basically, that would be a commodity essentially. We talked about derivatives this morning, but basically you have a piece of power there that is priced at the contract level that you anticipate is going to be higher priced or have more value later on. So to the extent that that PPA has value, then give that, sell that back to the market and cut your load when prices are high. But to do that, you have to make sure that your PPA is structured appropriately to where you still have that optionality and you gain the benefit of that. Otherwise, the benefit is going to somebody else. And that may be why we saw some of those guys not respond. They may have had fixed price PPAs and were immune to the price change. So they just went ahead and ran whenever they shouldn't.
So flexibility is obviously really important. So how does Bitcoin mining, to the extent that it's flexible, stack up against the other flexible resources? You want to start, Brad?
Oh, yeah, I'd love to. So Bitcoin mining, it has an incredible response time. So similar to batteries in the same type of vein, but incredible response time that we see. In fact, the response time is so good that we have to manage it, right? We've struggled a little bit with the very large of these structures that have been set up, these large businesses. We're working with them to make sure that we can coordinate them properly. It has everything to do with making sure we bring them in a reliable way and use them reliably. That's what it's about. Let me step back a little bit. I hear people around the country talk about, in some areas of the country say we shouldn't be serving Bitcoins. For whatever reason, they say that. We in Texas have always believed that we treat everybody fairly. Every business is the same. It doesn't matter whether it's a grocery store or a Bitcoin. We're going to treat them the same when they come in. We just want to make sure it's done reliably. And so this large flexible load task force is on that point. It's making sure we have the tools that we can manage these resources and optimize them to the benefit of the state, reliability, and the benefit of the individual.
All right, you want to jump in?
I'm going to jump in out of a turn here. Sorry, guys. Because I want to basically thank Brad for his leadership as he came into ERCOT in the wake of the winter storm that was devastating, and everybody was scared and looking for answers. And Bitcoin was a very scary topic, but Brad had the leadership to come in and educate the entire organization about the benefits of loads like this and how they can be used as tools, and really open that dialogue to all the stakeholders. And it's been an amazing process to watch an open forum like the Large Flexible Load and all the stakeholders with many competing interests come together for the good and understand that we have to do this responsibly or no one will have a home to operate. And that's a really large part is to your leadership. So thank you for
Trent.
Blazing the trail and putting us in the conversation.
Thank you.
Shaun or Clayton?
And maybe we can just pull up that slide there.
Yeah, are we able to share that? We can see it.
Yeah.
There it goes.
So I was really excited at the start of summer because at the time they were talking about all this, there's going to be some peak loads that are going to be happening in ERCOT. And the conversations that were happening at that time was that with all this Bitcoin mining load coming to the state, that it's going to essentially cause blackouts on the grid. And so I'm fortunate that with Lancium, I've been able to see kind of how the technology enables these loads to turn down, that it's progressing, that I was excited to be able to get to the end of the summer and to be able to actually have real data that you can show on saying how are these loads behaving and reacting to these certain prices. And so the chart up here we're seeing right now is that this is from July 15th, July 23rd. Lancium's commissioning it's a 25 megawatt site. We had 6 megawatts online. So the green line represents the megawatts that we were consuming over this 8-day period. The red line is the Bitcoin break even for an S19 miner. And during that time, the Bitcoin break even was $125 across those 8 days. That new number today, by the way, is $80. And the purple line represents the spot price of energy for ERCOT. And so we can see that this chart shows is that every single time that purple line crested above the Bitcoin break even, this mining load turns offline, turns offline, turns offline. And the way I kind of relate to kind of Bitcoin mining is it's Bitcoin miners essentially buying seasons tickets to some type of a sports team, and they buy all these tickets, but they can only afford to go to the cheap ones, right? So they buy all these season tickets, and then they sell off the expensive ones because all they want is this cheap stuff, right? And by doing that, it really helps them reduce their power price. Really, the punchline is that Bitcoin wants the megawatts nobody else wants, right? Which is, to Brad's point on some of this kind of excess wind and solar, you don't want to turn off. You want to have somebody that can consume that power. So it was pretty cool to be able to see kind of how these loads are now turning, and then be able to share with folks and saying this is kind of a path of the future, how mining is going to interact with power grids.
Well, to jump in from your chart here, I think it's obvious that by using that power, when power prices are cheap, you help to stabilize that price overall. By turning down when power prices are high, you help to bring that price down and stabilize as well. And that stabilization is going to drive more development of renewables than we could otherwise get in the state. So it really is a positive aspect for driving renewables in Texas. And I think many on the national stage that confuse this ignore that point.
Agreed.
Okay. Do you have anything you want to add?
That's textbook right there. That's what
Okay.
you want to see.
Perfect.
Shannon, maybe we just kind of flip to the second slide real quick.
Sure.
And this is to show that this is 8 days in July, and this is what 2.5 months look like, right? So it just shows that this wasn't just kind of picking a subset of days that were kind of what we're doing, but this is systematically controlling the load up and down for the whole period. And whenever that price was breaking above that Bitcoin break even, which changes daily, these loads are automatically coming off. It'll be exciting, Brad, when we see this in SCED, right, and having it in the purview of the grid operator to be able to have these loads dispatched.
Yeah, I would add that one of the differentiators for Bitcoin mining load versus a lot of other loads in ERCOT is a lot of those loads may be in the middle of a process or something like that. So even though prices do go high, they can't interrupt. In Bitcoin operation, you just interrupt. So it's a lot more flexible than anything that we've had before in the system.
Great, that makes a lot of sense. Do you have anything else you want to add to that?
I can always add. Let's go to the next one.
Okay. All right. So ERCOT is processing a rule change that will allow CLRs to transition from zonal pricing to nodal pricing. How does this help accelerate renewables and enhance grid stability? Brad, do you want to start with this one too?
Well, I'd be glad to. On the grid stability side, we need to get the pricing closer to the nodal price. By getting the price of the nodal price, that will allow us to use Bitcoin in a more efficient way. We can use them to help balance the smaller parts of our grid, not just the larger parts of our grid. So we can make sure that we're using Bitcoin, in fact, to balance out transmission congestion. That's something that we don't necessarily have today, because at the large zonal pricing level, we don't get the granularity of pricing that we need. So that transition is going to be very valuable to us.
Do you want to add something?
As with any of these very, very complicated processes, these take years to roll out, and they can always have unintended consequences. I mean, by definition, if everybody's at the average, there's going to be half winners and half losers, depending on where you are. So it's going to make your site selection very much more important. So if you've invested a couple $1 billion in a facility that's going to be on the wrong side of it, you're probably not for it. If you're located in a great spot, of course you're for it. So I think it's going to be interesting to see how it plays out, because it's not something that's going to happen tomorrow.
That's the key point, though. You want these loads to site where they need to site, which is next to generation, where there's like a generation pocket. So right now they're incentivized to site in West Texas broadly, because they're getting the same price as they would locating next to a generator. But that's not helping ERCOT. ERCOT needs help in curing that gen pocket. So nodal pricing does provide the best solution for everybody. That's why we went from zonal to nodal. We had a zonal market the first 10 years, moved to nodal for this very reason, and that's why I think it's very important for these loads, especially the larger ones, to be nodal.
Yeah, I think it's kind of like how the importance of nodal pricing is like, you think about where do you site generation, right? Where do you site batteries, right? So there's a price signal saying, here's where this power is needed most because prices are high. Don't go here because prices are low, right? And so this is essentially the same thing to have for generation and batteries. They're now rolling out for controllable loads. So the example is that there's this abundance of wind and solar in West Texas, and especially up near the Panhandle. And so now to be able to locate these loads right beside those nodes that have low price energy, you're essentially improving the economics of those winds. You're soaking up the excess power, which will actually incentivize more wind to be produced because you're now raising the economics there. So I think it's super excited about this new rule change that's going to have be the ability to say, where do you site these loads, and having this true price signal that's giving you direction.
That's great. This is a question that we didn't send out, but I wanted to ask you guys, given the recent developments in the Bitcoin mining industry and the correlated drop in prices, is there something that the miners can do now to maintain their competitiveness? Do you want to start?
Sure.
Great.
So I remember when I started trading power in Northeast power markets is 2004, and power markets had just become deregulated. And you'd expect that the generators would be doing the right behaviors. If gas is $10 and there's a cold day, the next day they'd have a heat rate, and they should be offering based on the price of gas, and they have the ability to sell back if it's uneconomic. Punchline is they didn't, right? And the reason is that we're in this transition going from regulated to deregulated. And so these gas plants were doing things that were uneconomic because they really hadn't developed the competencies in-house to say, I can make more money selling my gas back to the market than running for the power side, right? And so we're starting to see that now in a bear market, right? Because what happens is you say, like, how do I really identify the areas that I can optimize these billing parts, right? And so we talked about controllable loads having nodal prices. Okay, there's an opportunity for nodal pricing. How do I think about, instead of being 100% uptime, I'm hearing all these things about 95% uptime for the past 3.5 years would have saved you 50% on your energy costs, right? There's a winter storm Uri outlier in there, but it's big dollars. Then how do I essentially monetize the flexibility of my resource, right? So like, am I doing ERS? Am I doing response reserves, non-spin, reg up, reg down? But really it's like a time to really explore and say, like, I've got this great asset, like how do I best monetize that asset? So I think that miners in Texas and across other grids as well are going to say, how do I do this? What are some ways I can reduce this? And I think it's a net great thing for the industry.
Trent, Priority does a lot of this, right, with your clients. So what advice do you have?
Yes, this is exactly what we do, and every client is very different. There's a trade-off between the risk on the pricing and collateral to fix that price. So Most miners would love to take something out of the equation, their worst case energy costs. They'd love to have 5 years fixed price and then go from there. That takes a lot of credit, and as you can imagine with the recent headlines around Bitcoin and companies in the space, there's zero unsecured credit generally available for these guys. So that's the magic, is trying to figure out how to purchase power in a capital efficient way that accomplishes the goals of the client. Ultimately, the lowest cost of power is really the only competitive advantage as chip density starts to flatten. It's really about your marginal cost and power, and you have to put the demand side with the lowest cost of power to make it work. The people that don't optimize that, they won't survive. Bitcoin it does go in cycles, at least in the young market that we've seen, like other commodities. We've been in a exuberant, over-leveraged cycle that hopefully we're near the bottom of. But the people who've been through those cycles know that winter is coming, and they've prepared for that. And they've always positioned that every marginal dollar is going to matter at some point, and energy being the largest component of that now. It's about keeping your flexibility, finding someone you trust to advise you, not selling away your optionality for cheap because it's easy, and just knowing that it's going to be a dynamic strategy. You can't just sign some papers and walk away. It's a daily, it's an hourly decision.
Clayton, do you have anything you want to add?
Well, I would just say that the benefit to being on the market, basically, where you keep that optionality, is you can look at a price duration curve, and there will be a point that it's profitable for you to still operate. I mean, there's a large number of intervals that it's negative out in West Texas right now. You're actually paid to consume energy. So there's obviously some level up there that is your crossover point where you go from positive to negative on your valuation. So just get a price duration curve, figure out what you're needing to run at, and run at that level, and don't run above it.
Brad, anything from you?
No, good. I'm ready for questions, though. Let's get questions going.
Yeah. Does anyone have any questions for the panelists? It's kind of hard to seek.
Yeah.
All right, we're going to have to start volunteering people.
Right.
Okay, I'm not sure what 15 hertz means, but maybe one of y'all help me out with that.
I don't.
I know what it means, but I'm not sure what it means. But let's do it this way. So fast frequency response is a new ancillary service that ERCOT began to develop a few years ago. But what they recognized a few years ago is that so much more of this renewable is coming to our market, particularly solar, that we're going to have a fast frequency type response if we have interruptions, whether it be solar or wind for that matter. We need something that is much quicker than what we've normally had in our responsive reserves. So we set aside now a portion of our responsive reserves that we acquire that market for the purpose of having a very fast frequency response out of those types of resources. It's going to benefit batteries and may benefit, certainly will benefit the Bitcoins. It may benefit some of the large gen, but that is something that should be in place, I believe, by May of next year, 2023.
Yeah, I'm not sure that the Bitcoin control can handle that yet.
Sorry. Primary frequency response it's fine for generation, right? But a Bitcoin miner is not a generator. They're a load. And so to place that kind of a burden upon a Bitcoin operation to suddenly do primary frequency response is very difficult.
Are you
So the response, though, is that this is voluntary. So it's a market that you bid into to provide this service.
I think he's going to the CLR qualifications.
Oh, is that it? Okay.
Yeah,
All right.
you have to.
We've transitioned then.
Yes.
It's more to his point that, in order to become participant in the CLR program, the hurdle of becoming a primary frequency response provider is difficult for a load provider, for a Bitcoin operations side.
It is. Yeah.
Right. And so it seems to be an unusual requirement that doesn't seem to have any kind of sense for it.
Well, it does.
As somebody who is a miner, I'm saying why, and if so, if that could be changed, please do.
So primary frequency response is needed on the system at all times. If you ever seen the old Frankenstein movies and you see the balls spinning around on the wheel, that's a fly ball governor. That's a PFR responder, basically. Whenever the frequency goes down, it opens up a fuel valve that causes the generator to spin up. And so every moment in real time in ERCOT, we have frequency response of some sort hitting the market because because of the physics, the generation and load have to balance out at every moment in time, otherwise frequency goes down. So that's the reason, that's the need to have that. So to the extent that CLR becomes a big part of, a major resource in our market, it's going to displace other generation that's actually providing PFR. So that's why the obligation is there.
And so Lancium is a technology company that essentially develops software. And so what we saw on the screen was our software in action. So we do license out our IP as well for folks that are interested in having the ability to have your loads become CLR and to be able to provide this primary frequency response.
So I think the question is kind of getting mixed up in just in the existing protocols. Just the registration of a controllable load resource has to pass the test to be able to provide the primary frequency response. A lot of the benefit of putting flexible loads into CLR that we talk about at the Large Flexible Load Task Force is not necessarily that portion of it. It's what we call the SCED. So every 5 minutes, ERCOT having a view of your price points where you're going to shut down. That's the information that ERCOT really needs when we're talking about demand response and actually having a base point that they can control your overall load level. But right now, the two are kind of boxed together, and I think the question is why? Why do they need to be, and can they be pulled apart? Or can you have a different program that allows the benefits of being in SCED and the visibility without the high hurdles of primary frequency response?
Yeah, I think for SCED response, they are creating another category that doesn't require the CLR, the full complement of testing requirements.
So I think that would answer
So
or address the issue.
There's more work to be done. I know they're going to come out with some draft protocol changes very soon, within the next month or two, and that'd be the opportunity to get engaged on that. But thanks for your question.
Hi, I'm a miner that's looking for new locations, and power prices have generally gone up recently. Currently, what is the best deal for a long-term 5-year PPA in ERCOT for a large load, say 50 megawatts or above?
Sounds like a good Trent question.
Depends on what zone, and depends on if you're taking primary service, which would be out of a utility-owned substation, or a transmission level service. And so those prices are going to vary. For a 5-year, if you're like in West Zone, which is going to be the cheapest, you're looking at, on the energy side, around probably $45, and then depending on your tariffs, you can add another $3 or $4 to $25, and depending on your runtime and your utilization, because the delivery charges are fixed, a $17 per megawatt hour at a 99% runtime can easily go to $25 if you're only running 85% of the time, something like that. So that's the energy side before you participate in programs like ERS that might take another $10 off by simply doing that. If you do have fixed price hedges in place that you can sell back to the market when prices go up, monetize your optionality. We typically advise that between $10 and $30 per megawatt hour is something that's realistic to achieve to net down that price, so that $50 to $70 can be netted down, another 10 or 30 depending on the programs that you participate in, and depending on the price distribution throughout the time you're on.
And maybe I'll add that when we compare ourselves against ourselves, prices have gone up substantially, right? But to share is that Trent mentioned about like the price of power is $45. If you do a 95% uptime, you can bring that down, call it another $10. Some of these ancillary service programs, ERCOT is very fortunate that we have for the transmission costs in ERCOT, there's a program that's called 4CP, that the ability to actually avoid some of these costs based on your behavior. So if you can look at it like a 5-year strip and you're kind of applying all these different options that you can do to optimize that load, you can get into that $40 range and kind of in that buffer to share on kind of like what it looks like outside of other areas. And what the proof is that ERCOT's the best place is, how do you know you have the best economics for Bitcoin mining in the country? You have a 35 gigawatt interconnection queue that everyone wants to connect, right? And so if you look at other regions outside of Texas and kind of how those costs are allocated on the transmission side, the distribution side, and these other costs of energy, you're looking at something from a from 25% higher to 100% higher. So ERCOT still is a central place for low-cost energy for miners to come here. But it's tough when you compare what the rates were a couple of years ago against ourselves. But when you compare externally, like this is definitely the place you want to be.
Good, I love hearing that. So I appreciate that.
I would add that the territory that you locate, the area that you locate will be singly certificated or dually certificated to providers. So you need to know the rules between if your provider is competitive versus a municipal or a cooperative territory. There'll definitely be differences there.
But I think the long-term pricing thesis is very simple. We're the number one producer of hydrocarbons, we're the number one producer of wind, and we soon will be the number one producer of solar. All that exists where we have a free market and we're open for business. So there's no other place in the US that's going to have a longer-term competitive, cheaper price than ERCOT. Full stop. We work with miners from all over the world that have projects all over the world, and they still come to Texas because we have contract law and cheap prices that are available at scale compared to anywhere else they can achieve them.
Yeah, there we go.
Hey guys, thank you for the informative presentation. Something I've come across recently is a pushback against this notion of miners scooping up cheaply priced power. The White House said it recently in their report that it impairs the economic price signal to build more transmission. I keep seeing this now in policy circles pushing back against this notion of miners buying cheap power. How would you respond to that accusation?
Yeah, well, it doesn't make sense to me. I think that's how I'd respond. So impairs the ability to build transmission. Now, we're looking at transmission for reliability reasons. We're looking at it for resiliency reasons. And we're also looking at it for economics in Texas. And so we do that economic analysis. Now, if a Bitcoin load can reduce the need for new transmission, that's good for everyone. Transmission costs money. If they can't, we'll build that transmission based upon those economic signals to those regions that need it. So I find the argument to be confusing to me. But thanks for the question.
Well, it might be the difference between ERCOT and the everywhere else too, right?
That's always a good thing to say, right? It could be. It could be. But even I've been over on that side too. Even there, I don't see justice in what they're arguing.
Okay.
I don't see that it makes sense.
Yeah, and it points to the benefit of nodal pricing as well. I mean, as long as we get these loads at nodal pricing, you're going to site at locations that cause less transmission loading instead of more.
Yeah, and that's good for everybody's bill, right? It lowers everybody's bill if we can get those costs down.
Do we have any other questions? Oh,
Yeah, I've got one right here. As part of the next market redesign, there's a new product called ECRS. And I'm wondering if any of you have thoughts on whether it would be suitable for Bitcoin mines or sort of what the intended purpose of that product is.
So the ECRS originally started off, excuse me, I'll let you go too, because you know this as well as I do. Well, first I need to say ECRS stands for ERCOT Contingency Reserve Service. And I think it is morally reprehensible that you turn an acronym into an acronym. So I've been against ECRS. It should be CRS. That's all it should be. But nevertheless, it's called ECRS now. ECRS was designed to manage some of the disruptions in the market, to give us yet another ancillary service reserve that was fairly quick starting, that would allow us to stabilize the system. It has morphed in time, though, because there's a recognition that every single night, about 8 o'clock during the summer, the solar is going to stop working. We know that's going to happen, right? The sun goes down, the solar stops working. And when we have 10,000 megawatts of it today, all right, that's fairly easy to manage. When we have 30,000 megawatts in a couple of years, potentially, there's a lot of work to replace that 30,000 megawatts in a short amount of time, a couple of hours. And so ECRS is designed to fill that window. Now, part of what Bitcoin, I think it's a great opportunity for batteries in Bitcoin to be in. Part of what Bitcoin could do is to help us to manage that down ramp of solar by also bringing the loads down. In the summer, it's not as big a problem as it is in the winter. Because in the summer, the load is coming down about 8 o'clock as it begins to cool off. In the winter, as it begins to cool off, that's at the same time that our solar is going down. The solar goes down and our load actually begins to climb as it gets colder overnight. So there's more advantage for ECRS in the winter than there is summer. Both of them create advantage for us, but I do think it's a great opportunity for Bitcoin to participate as well.
I agree.
You good?
Thank you guys so much. Can I get a round of applause for our panelists?
Thank you.
For being told to wrap it
Great
up.
job as always. Good to see you guys.
I'm Lee Bratcher, the president of the Texas Blockchain Council. Thank you to everyone who came out to this year's summit, helping us make it the best one yet. Now more than ever, we need professional industry associations like the TBC to help craft effective policy instead of the CEOs of centralized exchanges roaming the halls of various state capitals or in DC. Texas is quickly becoming the center of the universe for Bitcoin, blockchain, and digital assets. If you want to be part of the future that we are crafting here in Texas, join the TBC today.